Good morning, traders. This is John with Stock Strategy Circle, and we have a stock update for you. This is a stock that I just purchased. The company is VITL Farms Inc., and the ticker is VITL. And without further ado, let's get into it. Today I'm inside of TC. I've been a customer of TC 2000 since I got out of the Navy, and most of the time I'm trading now out of Trader's View, but I still use Telechart 2000 because it has some features on it that are pretty cool, but that has nothing to do with what we're going to talk about today. I found this chart using a Telechart 2000 scan. One of the things I don't like about T2000 or TC 2000 is their volume profile layout is essentially useless. In fact, probably if it wasn't for this, I would use TC 2000 exclusively, but this gives me almost no useful information at all. You know, really a whole lot of buying took place here, where if you look at Trader's View, it gives you a much more refined view, so you can actually see where the levels of support and resistance are. Having said that, let's go to VITL. So, what is going on here? So, if you've paid attention to any of my other videos, you'll know that I use the volatility stop indicator pretty frequently in my trading. In fact, it's probably my primary indicator other than straight up trend lines. Why? So when you're looking at doing position sizing, you have to take into account the volatility of the actual stock that you're trading as opposed to just your account size. If you have a $50,000 account or $100,000 account or even a $1,000 account, it really doesn't matter. You can't arbitrarily set your position size based on your account size because different stocks behave differently. So just saying I'm going to buy $500 worth of this or 500 shares worth of that and not accounting for how volatile that actual stock is, your risk-reward ratios are going to be arbitrarily wrong. And so what do I mean by that? Okay, so if we take a look at this particular stock, and here's the uptrend, and generally speaking, any trading activity that takes place above the volatility stop is normal activity. It is completely common for stocks to come down and touch the volatility stop like we have right here, and then rebound and take off. Well, if you'd have had your stop loss right there, you would have got shaken out of this position. In fact, this particular daily trading here is not a sell signal. It's actually a buy signal. This is a spring. Anyway, but you can also use it as a determination as to when the trend has actually changed. And so with VITL Farms, we have a nice strong uptrend. We sold off here going into July and August. And then we made a low, we made another low, but what's important here, there it is, boom. Here's the downtrend that was created when we broke support, and as you can see here, get my head out of the way. As you can see here, we have broken above that a couple of days ago. I was actually planning on buying this on the breakout, but I forgot. Now, as you can see, I bought 22 shares of this, right? And so why 22? That's a weird number, right? So the way I account for my risk is I find where the volatility stop would be. In this case, it'd be around 31. And then I go to the 21-day high. So that's where I set my volatility risk number from. Not where my buy order goes, but that's going to tell me how many shares I'm going to buy. So how's that work? Okay, so currently the market's trading at 35.92. And our support, our volatility support is down here around 31. So that means we have $4 worth of risk in this particular stock. Now, you get to determine how much risk you want to take on any one trade, but whatever that number is, it should be based on your account size and on your personal preferences. I trade a lot. I buy a lot of small positions in a whole lot of stocks, and I stay in them while they run. And because I trade a lot, I like to take really, really small portions of risk. I typically don't risk more than $100 to $200 on any one trade. If I have $4 of risk in this stock, then that tells me if I only want to risk, let's say, $100, what is 4 times 20? Right, that's 80. So if I have 22 shares at $4 worth of risk, I got about $88 worth of risk in this particular position, right? So I got less than $100 worth of risk, and that's basically how I do it. Now, what you want to do if you don't trade as heavy as I do, if you are a swing trader and not a position trader or a fundamental trader, right? This really only applies to people who are swing traders like me. I don't marry any stocks. I only date them. I buy a lot of positions. When they start to look weak, I get rid of them. Generally speaking, when you do that, you're going to have a lot of positions that you will get out of as soon as they start to look weak. And so if you want to catch big runs, you got to have a lot of positions. So I wouldn't recommend that if you're doing this kind of trading that you risk more than 1 or 2% of your account size. And that's different for everyone. So I can't arbitrarily tell you buy 50 shares or buy a 30-year account or whatever. But you have to determine that. I do that because I use poker player strategy in my trading. Well, 21 player, not poker. And in that, you want to play as many hands as you can when the odds are in your favor to maximize your amount of returns. And that's basically the philosophy behind it. So with $100 worth of risk in a if you have a $1,000 account, okay, and you're only risking $100 at a time, you can take 10 trades and completely lose them all before your account is scratched. If you have a $10,000 account, now you can do 100 trades. If you got a $100,000 account, well, if you got a $100,000 account and you're trading 1% risk, well, now you're going to risk $1,000 per trade. You follow that? And so you take $1,000 per trade. Now you have larger positions you can take, and you still do 100 in a row before you're completely wiped out, and that assumes that you just are the worst stock picker in the world. I don't know why I'm talking about that. That has nothing to do with this trade, so let's move on. I'm probably going to edit that whole section out. Okay, so why this stock? What took place in this stock to make it look interesting? First thing I noticed is we have this 2 spikes in trading volume that occurred. One back in May. Well, actually, there's 3, 4, there's several of them, but the biggest volume, this is at least 5 times the average trading volume right here, and it's to the upside. That's very significant. When you see a huge spike in volume like this, it's not this day that matters. It's the subsequent trading days that matter the most, because this could have easily been a sign that the run was over. Okay, was it? Well, we'll see. You have this huge spike in trading volume, followed by the volume slowly trails back off, but subsequently the stock makes new highs. That's pretty bullish. We have another spike where we have trading volume, and yet again, the stock took off and made new highs. Now, it turns out that that was the end of the run for this particular stock. If you'd have been using a volatility stop loss on this particular stock, by the way, I didn't buy it back here. If you would have bought here, set your stop loss there, this trade most likely would have worked out to be a break even for you, depending on how you do it if you follow my system. Now, I don't typically chase stocks like this because there's no base here, so there's no reason to buy it. But here we've come into a base in this downtrend. Why? So we made a huge spike on volume to the downside, and then we started putting in a base. It no longer penetrated back through here. In fact, instead, we ended up getting a nice smile on the chart. Right? We have this smile in volume. Erase drawings. Trend line. This is driving me crazy. I haven't used this software in so long, I don't even remember how to do drawings. Okay, so through this base here, Okay, so what happens here is we have this big spike down on heavy volume. We have a couple more days of down activity, followed by a rally, followed by a penetration of the previous low. But what happened? There was no volume and there was no follow through. The very next day after this penetration of the previous low, in fact, you know what, let's fix this trend line because it's not really where it's supposed to be. It should be like that. The very day of this, first of all, we didn't close below, but the very next day it's up, 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 and it's outside now of this volatility channel. It's broken the downtrend. This formation here is a nice saucer formation. I wouldn't be surprised if we had a little bit of a pullback to come back and touch this line. In fact, if that happened, that would be extremely bullish. But whatever, you know, in for a penny, in for a pound. The other thing I wanted to show you over here is this stock has good fundamentals. And this is one of the most powerful features of TC2000, which, by the way, I don't get paid for. I'm not even an affiliate for them. This data, once you learn how to do it, you can set it all up so you can visualize the fundamentals right on the screen. So this is a 233-day moving average of their earnings, and their earnings are growing. They're not growing a lot, but they are growing. Their sales, nice steady growth in sales. Common stock equity. If you want to find companies that are well run, and I mean well run, and not companies where they're hosing the shareholders, you want to see that the common stock equity is growing. It needs to be on an uptrend. And look at that. Common stock equity is growing. Book value per share. The book value per share is also growing. Usually book value is going to go up if you have common stock equity going up to kind of run together. Operating income before expenses also growing. So this stock fundamentally is a growth stock. So we have a growth stock coming out of a base in an overall probably bull market. It's kind of hard to tell. I mean, we might be in a languishing market, but since we're on the verge of a hyperinflation, most likely it's going to be a bull market. And anyway, this has been a trading update with John from Stock Strategy Circle. If you were a paid member of Stock Strategy Circle, you would have been issued this trade alert as soon as I placed the trade. This is already posted for members of the Stock Strategy Circle, and it happens instantly. You would have been given this update inside the app, and then if you want to check out the stock, you just click this link, and the link will actually take you into Trader's View, where you can pull up a chart and see what's going on with Trader's View. Like here's the same stock inside of Trader's View, and I have some different indicators on there in Trader's View. It looks like we're going to have some overhead resistance on this one around $41 a share. This is what I mean, that the volume profile on Trader's View is so much better than on TC2000. The TC2000 one is actually an embarrassment, but their software is really good for making scan lists and whatnot. Anyway, so there's going to be some overhead resistance here at 41.35, which, as you can see, this is exactly where more or less the stock turned around last time. So remember, old support becomes new resistance, but you know, whatever. This is John with Stock Strategy Circle. Happy trading.